Hi, everyone. I'm David Silver, CEO of Instrumental Wealth. Joining me today is Drew Allen, Senior Wealth Advisor. The One Big Beautiful Bill was signed into law by President Trump on July 4th, 2025. And there's a whole heck of a lot to unpack within that One Big Beautiful Bill. But one of the key areas relates to 529 plans. And there's a ton of changes within the rules of 529 plan usage and a ton of planning opportunities around that. So Drew, let's unpack this a little bit as far as what clients should know and how they can take advantage of this.
Yeah, so changes on the 529 and the One Big Beautiful Bill that was passed by President Trump on July 4th, 2025 were great. I don't know how else to say it other than we're really excited for parents, grandparents, aunts, uncles, probably most excited for the kids that are going to benefit from this. So what changed and why are we excited about it? Well, a few years ago, we need to back up to that change of allowing 529s not just to be for post-secondary education such as college, but that they moved it to a K through 12 education, and there was a $10,000 cap. So if you wanted to send your child to private school or pay for expenses that were qualified out of a 529, you couldn't do that until they enacted that, and they put a $10,000 cap. So what did the One Big Beautiful Bill do? They doubled that. So now it's $20,000. So where does this become apparent? We see grandparents who want to get maybe money out of their estate and maybe front load a 529 for grandchildren when they're born, or maybe they're in elementary, middle, or high school already, and they want to make larger contributions. They can now do that, and the expenses can be paid out of there up to $20,000 a year. So that's a big deal for a lot of folks. That there's a lot of things going on with education these days, and folks wanting to put their kids in private school or some other type of school outside of just regular public school, and now they're not capped at $10,000. So that is a big deal, and we do get that question a lot from clients because they may want to use that as a strategy to pay for their kids' education. You know, another big thing that I mentioned just a minute ago is really an estate planning tool, and there was some limitation before because of what you could use it on, that we saw some grandparents specifically maybe not want to use it because it was restricted. But now that it's K through 12 plus post-secondary or college, they can feel confident they can get money out of their estate, so it's non-taxable against their unified credit, and they can get that into a position where their grandchildren can use it. Where that also becomes a big deal is with the Roth provision. That necessarily didn't change with the One Big Beautiful Bill, but it is something to note. So if people feel confident putting larger amounts or building larger 529s, where after 15 years we can then roll up to $35,000 of that 529 into a Roth IRA for the beneficiary. So not only are we educating our children or grandchildren, we're getting them off to a really good start for their future. So again, 529s, big change there on doubling what they can spend K through 12 from $10,000 to $20,000, giving more confidence in these accounts, and then some of the other strategies that can be used on a 529. So we're really excited about this for tax planning, but also for kids in their future who are really the future leaders of our country.
Yeah, no, that's great. And I think there's a ton of planning opportunities here. I think about a recent conversation that I had with a client just last week around this, who just sold a rental property, had an infusion of cash. And what they were able to do with this infusion of cash was they were able to aggregate 5 years worth of annual gifts. Both parents were able to do this. So they were able to put $190,000 away as a lump sum into a 529 plan for each of their children. So $360,000 they were able to utilize there. And because of the $20,000 that's now allowed to pay for private school tuition, K through 12, they were able to pay for that with the proceeds from the growth of those dollars now in the 529 in a very tax-favored manner. Whereas before, they were paying for this out of their cash flow, which meant that they had to earn the income, they were taxed on the income, and this was part of the regular budget. And so this now also freed up about $19,000 a year per kid that they were paying out of pocket because they were able to utilize this new planning opportunity and really take advantage of this quite a bit. What they've decided to do to take it one step further was they said, well, look, we're already used to this expense in our budget. Why don't we just act like nothing happened here and take that $38,000 that we were paying for 2 kids in private school and just put it into our investment account so that we can enhance what we have for our retirement savings and ultimately boost what we're contributing. And so not only were they able to take advantage of the provisions here with having tax-free growth and no income tax on the growth of those assets that they put into the 529 plan for the 2 kids, but they were also able to utilize that reduction in their expense load and start saving more for their retirement, which was a need as well. And so there's a ton of planning opportunities around this. Obviously, the bill was just passed, so more and more will come out of this. But if you're watching this video and you're wondering, gosh, there's probably some opportunity for me in here, message us through social media, hop on our website at instrumentalwealth.com, schedule some time with one of us. We'd love to have a deeper conversation with you around this if this topic is relevant for you. Thanks, everybody. Have a great day.